Hi, I'm John Fazio, founder of Winning Advantage. I work with founders and investors on positioning, capital readiness, and how startups are presented for funding. Today is about how investors think. The rest of the series breaks that thinking into practical, pitch-ready pieces. Today, we will look at what truly motivates investors, what makes them say yes to one opportunity and no to another. The key message for this session is simple. The best businesses aren't often funded. The best presented businesses are. The presentation will explore the psychology, economics, and storytelling that help investors connect emotionally and intellectually with your company. Let's start with the mindset that drives their decisions. Investors see hundreds of pitches every year. Most of them look similar. A good idea, a solid team, a decent product. What separates the few that stand out is how clearly they communicate confidence, clarity, and resonance. Every investor decision balances logic and emotion. Even the most analytical venture capitalists start with a gut reaction before diving into the details. Your presentation needs to connect emotionally first and then rationally to justify that excitement. Let's explore that balance more closely. Investors constantly shift between two emotional states: FOLS, the fear of looking stupid, and FOMO, the fear of missing out. On the left, FOLS drives caution, hesitation, and overanalysis. On the right, FOMO creates urgency, competition, and decisive action. Your presentation's job is to move investors just far enough toward FOMO, excitement, without triggering FOLS. When they're too cautious, they delay. When they feel they might miss the next big thing, they act. That's where powerful storytelling comes in. Investors, particularly angels and venture capitalists, think in portfolio terms, not individual deals. They know that roughly 80% of their investments fail, returning nothing. That means the remaining 20% must carry the entire portfolio, producing enough profit to offset all losses. For that to work, they target a 20 times return in about 5 years. So when you pitch, they're mentally asking, could this be one of my 20 times wins? That's why your projections must show credible potential for exponential growth. We'll cover how to build those projections in a future session, but for now, remember, every investor is searching for the big winner. What do investors actually want to see? First, a great story, one that connects emotionally and shows why this business matters. Second, a big market, proof that your opportunity has room for exponential growth. Third, a viable model, evidence that you can get from vision to a 20 times outcome. And finally, a confident team. Investors bet on execution, not just ideas. Remember, they fund people and potential, not spreadsheets. Investors buy emotionally and justify rationally. That's why your story, your personal why, is essential. A compelling founder story creates empathy and trust long before your financials appear. Align your narrative with broader issues investors care about: innovation, sustainability, inclusion, or transformation. When your values resonate with theirs, it opens the door for belief, and belief opens the door for funding. The investor journey follows a predictable four-step path. First, emotional buy-in. They connect with you and your purpose. Second, analytical review. They begin verifying your claims with data. Third, risk mitigation. They test whether your plan and your team can actually deliver. Finally, return logic. They determine if your growth potential can yield that 20 times return. If you lose them emotionally, they never reach the analysis. If you earn their belief early, they'll look for reasons to justify saying yes. about how to avoid triggering investor fear while creating genuine excitement. Confusing financials cause foals. Simplify them with clear visuals. Overclaiming breaks trust. Anchor your statements to evidence. Weak traction invites doubt. Share validation from real customers or pilots. Unclear market fit leaves investors uncertain. Qualify the pain and your solution's measurable value. And finally, a cold mechanical pitch erases connection. Authenticity builds confidence. The more you reduce foals, the easier it is to create FOMO. Here's the entire investor mindset distilled into one line. Investors must believe in you before they'll believe in your numbers. That means you lead with emotion, your story, your conviction, your clarity. Then you follow with logic, your model, your validation, your projections. You reduce foals through competence and increase FOMO through opportunity. When investors both trust you and fear missing out, you've reached the sweet spot of persuasion. Moment to consider 3 questions. First, does your story connect emotionally? Second, does your market opportunity credibly justify a 20 times potential return? Third, does your presentation move investors from foals to FOMO? These questions form the foundation of a fundable presentation. If your answer isn't a confident yes to all 3, that's where to focus next. The truth is, investors don't fund the best ideas, they fund the best presented ideas. They fund leaders who communicate confidence, clarity, and conviction. Your presentation is not decoration, it's your bridge to funding. Remember, the best businesses are often not funded, the best presented businesses are. Thank you.